The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. This is the 8:06 a.m. in the morning edition. We'll be repeating this at 10 o'clock, my usual time, and I will be out. So the session I'm doing today could be repeated tomorrow, because what I'm doing is giving you the broader outlook in all the different stocks. The YM, that is the futures right now. The Dow futures are up 89. The S&P, let me go to the continuous contract for the moment, is up 18 at 38.26. The NQ, which is the NDX 100, went down to a low that matched the low that was made back on the 4th of November at 10,794. Yesterday's low was 10,772. So we've met all the criteria for bar symmetry, and it's one of the reasons why we're wanting to add this particular point to our long positions in the Dow. But there was a very quick peak ABCD in the NQ, that's the NASDAQ futures, the NDX 100 futures. And that was way underneath the previous high, near 14,000, and that was back in August. So this is I would say, in essence, this is somewhat of a failure pattern, but it has been contained within the borders of the upside and the downside. If you're looking at the RTY, which is the Russell 2000, the Russell 2000 right now is trading at RTY. There it is. That has not taken out left side lows. It's actually held quite a lot better than the QQQ and even the SMH, the semiconductors. But what's really important about this is that I will go to the IWM right now. That is the actual trading vehicle, the iShares Russell 2000 ETF. That cannot get above. So far, it's just struggled to break above the Chapman Wave inside track repellent zone that we were looking at for months. And it got there and it kept testing, broke out for 1 week above this green resistance line and then closed back under it. That's going to be the big challenge. In the first 3 to 4 weeks of January, are we able to get to 192, to break above all that resistance in the IWM? Looking at gold, gold right now, as we talk on the 29th at early in the morning, it's pulling back just to at 1814. I think it's in this big consolidation and upside rotational correction within some of the miners and some of the and the gold contract itself, with that 200-period moving average of 1792 becoming a really strong magnet. And it suggests that even if there was a sharp pullback, it'll come back and retest the 1792 level. The silver contract right now is trading nicely up. It's up a quarter point at 24.09. Also high level a rotational correction within the spectrum of a border, and that border says 24. The moment it closes above 24.52, the moment it closes above 26.20, this is a significant breakout for silver, which has acted way better than a gold. High-grade copper at this point is sitting on the 200-period moving average of 3.82. It's down a penny. It's just right there. Looking at crude oil is trading down $1 at 78. As well. It's actually in a downside corrective rotational move between the borders of 70, I'd say between 73 and 83, and it can stay there for a little while longer, another couple of weeks. Looking at the TLT, and that is bonds. Bonds keep pulling back. They're up 5 ticks today, 99.60, but the yields have been moving higher. So I've covered a chunk of that. Now what I want you to do is this. AXP. These are the Dow stocks. Under the 200-period moving average, in a lower sideways move, it's basically a rectangle between 100 and, say, 65. It's at 144 right now, and it's trading between that 100 and, I'd even put it at 162 to 137 is kind of the trading band. It needs to break away from that over the coming weeks. And that's American Express. Amgen was a spectacular leader. Amgen screams up to the 290s. It's now today it's up 245 pre-market, 263. But that single leg A to the upside, I'm watching it very closely. Is this going to be an E or a B in the monthly chart? But Amgen has been an absolute spectacular leader. It's in the Amgen Biopharma. It's in the right area, but so far it's in the wrong area since November because it's been pulling back. And I would suggest that Amgen at some point could test the 252, 200 period exponential moving average as it digests the huge gains that it had going from October into the high that was made in November. It doesn't even have to get there. I would say immediately it could do that. It's a very choppy, low highs and lower lows. But then I suspect once it forms some kind of a base, it'll start to rally stronger. Looking at Apple, I've had a target on Apple. If you remember, 116.21 was the low that was made back in, let me just check the date, back in March of 2021, screams up to 182.94, making this big arch formation. And this is really the story of the market, that we've seen a rotation from the spectacular NASDAQ-type stocks and other stocks that were COVID-related. And now all of 2022, many of them have just been digesting those huge gains by pulling back sharp. Some of them are not, I wouldn't call it digest, I call it indigestion. They've made a full arch circle, that is a semicircle to the bottom, and Apple has been the slowest to do it. I don't think it's quite done. And that just says to me, we're going to be in a very choppy period, but it's going to be enough selectivity to see some kind of a bounce, maybe starting today, maybe even you have to wait until next week. But I think there's a bounce coming. The bounce could garner more energy to the upside if we celebrate the 1-year anniversary of the S&P highs, all-time highs, by actually breaking to the upside instead of the breaking to the downside. Looking at Boeing, this is the cyclical area. And I've been talking about this. The reason why I've liked the Dow for so long is some of these cyclicals have been spectacular in a period where we should be talking recession. So this rotation, and someone said to me, what are you talking about rotation? That's your excuse for everything. No, you've got to identify these things. There are times where you go sideways, and what it says sideways says that some of the stocks in that sector, just even if it's a handful, are strong enough to keep the momentum to the upside, while some of the really weak ones keep dragging it down, and you've got this fight. And that fight can occur on the upside. Look at this chart of Boeing. There's a rising channel. And that rising channel says that until Boeing breaks under, it's at 188 right now, it's gone to a high, a recovery high, a yearly recovery high of 196.40, and that was 5 sessions ago on the 21st. And now it's kind of gone sideways. I've got this as a leg. Everything about this really looks like it's a leg B in the weekly, and it's broken out of the monthly resistance. So Boeing is telling us that countries are starting to have to put to work for airlines. They've got to replace the airlines, and this is a good sign in the whole cyclical area. And that includes Caterpillar, a Dow stock, and that's a little bit different. It's getting a little tired right now. I'll be back in a moment. Basil Chapman, Tiger Technicians Hour.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
So I had a question in the den about the QQQ. I was going to take some time on it a little later. I'll do it right now because it is so important. Look, I have a technique that I call price symmetry, and it can go from a low to a high, and then how it comes back to that low is very important, and if it takes out that low. Well, the low that I'm looking at in the QQQ, which is the Invesco QQQ Trust Series, if you go to the low that was made on the 4th of November of 260.10, it went to peak A, peak B, the original ABCD, EF, started at 254.46 on the 13th of October. I wanted to start this particular one on the 4th of November. So that goes to a D, an E, and an F at 296.88 on the 13th. But I had already started putting in what I thought would be, even if it went higher, Chapman inside wedge, target support line. That's a dashed line from that peak D right there. And I put in, this is the symmetry, the doji candle high that was made at peak E. When it doesn't look like it's exactly the midpoint, I have to use alternatives, and I usually use a particular candle or some icon that's really standing out is very important. It could be a low or a high. This is both a high and a doji candle. And then I put in the target resistance line, even though it had a rogue wave spike to the upside to 296.88 on the 13th. What's a rogue wave? Well, rogue wave is where all the technicals are deteriorating, and yet there's this one news-related flurry to the upside that takes out the previous high long enough for the shorts to say, oh, I knew I shouldn't short this. I got to cover. And for the longs to say, oh, I knew I shouldn't have got out of this. It's been rallying. It's looking good. And it stays in just long enough for both parties to change their positions. And then all of a sudden, that same bar takes out the left side high that it goes above. That's, in this case, the high of the 1st of December at 295.75. And before you know it, it's back to being negative underneath the 9 and 14 period moving averages. That's a rogue wave. So it's a perfect example of a rogue wave. It just happens out. You know, my expression of the rogue wave is there's a sign at the beach that says high tide at noon. Well, you go there, you get there at noon, you think, oh, this is great. Tide's coming, going to come. Tide's going out. so the waves are lower. I'm going to get my favorite rock right on the outskirts of the beach, and you sit there and you're just about to, you put down your towel, you've got your book that you're going to read, you've got your drink, whatever it is in your hand, you've got your suntan lotion, your dark glasses, and then out of the blue, splash, there's this wave that comes from nowhere. You look around, you're wiping your eyes, and look around, and the tide's going out. You say, where did that come from? That tide didn't see the sign that said, high tide at noon. It's 12:03. So that's the high tide, right? And then what happens is it pulls back. And look what happened. It came within 1 day of getting really close to the low that was made right there on the, 4th of November of 259.08. Yesterday's low was 259.73. I would say that that's really good. The on-balance volume is oversold. The stochastic is making a slightly higher low, so that's a positive divergence. The MACD histogram hasn't started to improve, so I'm suggesting to you, and the 9-period moving average is still way under the 14, to get a left side, right side price time match in this particular shorter term arch formation, you would have to see no new low today and it closed at the low, so that's going to be tough. It's going to have to gap up what it's already at 262.07 at 197. And you don't want to see a break under that because that starts to trigger the new low that was 254.46 way back in October. So this is what you need to see. You need to see by Wednesday, we come back Tuesday. I would say I'm going to give it all of next week, Friday. By Friday, if the QQQ has managed to rally above 269.08, that's a big ask, but that's what I'm saying. That's one sign of at least near-term strength. If at any point there's even a spike above the 272.34 14-period moving average resistance, it doesn't have to close. Just a spike above says, aha, for the first time you will start to see the histogram, which is improving just a little bit. That's the vertical lines that's telling you the distance between the MACD's slow-moving average and the fast-moving average is improving. And the stochastic at 10.64 really needs to get to 17%, 13 quickly and then 17% for you to see a reversal here that is something more than just a little blip. And if we're able to do that, you'll see that we'll be making slightly higher lows and higher highs, and that can change the trajectory, at least in the near term. But I can just tell you this, if there's a close under 258.50 by Friday's close, that's tomorrow, then you've got to be prepared that maybe we have to test. It could be that we stop. I've seen this so many times. We stall in between this low and this low. So that's in between 259 and 254, and that's where a pretty decent low is made. Now, that's just the near term. But if you're looking at the weekly chart says something a little different. The weekly chart says you have made your peak D. When you go very quickly from a peak A, then a B, and then a C, and then a D, I always say be careful because you've got a pullback coming up. It doesn't necessarily mean that you've got a major sell signal, although in this case, in the weekly chart, it's a pretty serious sell signal just based on this weekly chart itself because it got repelled at that resistance level, but it is so far above the 254.36. The MACD has just crossed negative. It's just about to cross negative. Stochastic's still much higher. So all the technicals actually, in terms of MACD, on-balance volume, and stochastic, are suggesting we're in an area that could see some kind of a bounce. But that bounce, it just has to happen ASAP, right away. But there's no more room for any more weakness because that'll give you a weekly close that's even worse than it is looking right now. Now you've got 2 days in which to rally. And okay, so that's at a peak D, and that says in the weekly chart the QQQ, and I'm making a fuss about this because between the SMHs, the semiconductors, which is a slightly better chart, look, the semis haven't come back as much as the QQQ because that's 100 stocks is a little bit less. but it is a sector that's very important. So the daily, the weekly, and the monthly are actually holding a lot better. I wanted to buy something in the semi area this morning, and I said, you don't want to take a chance right now. You want some viability, and they're just making lower lows and lower highs. I'd rather by buying strength than to try to buy a falling X right now. So the semiconductors are a little bit different just on the very near term to the QQQ, because the QQQ is already saying, I'm very close to support. This is where I should be bouncing. So not only that, that's a Chapman wave inverted. Oh, this is a Chapman wave inverted Roman candle. If at any point in the next 2 sessions, there's a push in the QQQs to 264.40, it's a big ask, 264.40, and it holds for 60 to 90 minutes, it could retest yesterday's high of 265.47. Hope that covers that, and I'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hello, we're back, and I wanted to say this is the early edition. It'll be repeated at 10 o'clock. What we're looking at this particular point is 8:30 must have been some economic news Thursday. The S&P is pulling back a little bit. We wanted to see just a little bit of pullback, but not much from the early rally. And then we want to see higher lows and higher highs for the rest of the day. There could be a stalling motion. Then we'll see what happens. So I had a question about DocuSign. You have DocuSign's up 59 cents at 53.36. It made a peak at about 61 in the 61.40 area about 2.5 weeks ago. It's pulled back very gently. The 9 is still above the 14. The MACD is holding okay. Stochastic's weak at 62. On balance volume is a little bit negative. Relative strength has been weakening. But what you really want to see is the weekly chart turn this inverted wick right here, Chapman wave Roman candle, upside down. You want to see a push at some point. In this particular case, I'm going to make it a whole day. I want to see why is it doing that? I'll grab another mouse quickly. I don't like to be messed around here with these mice. There it is. So this level right here, you want to see it break. I'm going to say 90 minutes above 59. It's trading at 53.50. At any point in the next, I've got another week to go. Going into, could it be 2 weeks in this particular case? It has to be very soon. It has to get to the 59s and hold, and that will say there's a chance very quickly within a couple of weeks that we take out the 61.60 high that was made. Oh, that was 61.60. That was made on December the 12th, 14th. And that's really important. And that's really what you want to see, a big U-shaped pattern. You don't want to see a break under 49. In this particular case, 49 is really important to hold. Okay, so so I hope that helps with the bigger picture of the QQQ. And this is a very important, I know the question is, what would point to a bottoming formation here? Well, the double bottoms is what we've seen, because we've seen so many of the double tops and bottoms that have been working for months now. So will this be one of those situations? And even then, I have to say, in terms of the NQ, that is in terms of the NASDAQ 100, in terms of the SMHs, it's going to take a lot more. And I just had an email saying, with the QQQ so low, how does the general lead without the troops? And that's absolutely true. It can do it, but only for a little while. So within that context, let me do a couple of other things. I'm looking at BTAL. I've got questions coming in. I had this whole thing prepared for today, but I do want to get questions. That's what we're here for. BTAL is AGRQ market. Gee, I don't know what this is, but I can tell you right now, it's gone to a peak A, peak B, peak C, peak D, and it's made a peak E, but it's still making higher highs and higher lows. The stochastics are 93. I'm not sure what this is. I'm going to see if I can read it. Let me get closer. This is the market new anti-bets. Oh, anti-beta. Oh, okay. This is a kind of a derivative that's essentially looking at no beta. So I think that's what it's looking at. But actually, it's working very well. But if you look at my rectangle formation, remember, a very large rectangle. I have a whole webinar, a couple of webinars based on this. If it starts to make higher highs and higher lows, then you're looking at the potential in that time frame to go to a peak A, B, C, D. And when it gets there, it should go just under, right on, or just above the previous high. And then if it starts to pull back and takes out a halfway marker between the rectangle high and low, be careful to go all the way down. But in this particular case, it's already at an E, and it's just working its way towards the high of 22.04, and it's trading at 21.50 right now. Yes, I think it's doing really well, but it's just getting to the point of resistance, and that's all. I've been using that to hedge. Okay, as a hedge, great. So as a hedge, it works perfectly. And that coincides with what I'm looking at for this first week of January. This is where I think that we start to actually see some new buying come in. Just tentative new buying, but enough to move the markets higher. That's what I'm looking at. Could be wrong. And I'll go into that when I get back on Tuesday when we're looking at the beginning of the year. I've already started to look at all the factors that are important to me, and what happens with the single-digit stocks that are acting so well, especially the microbiotechs. Do they take a break now as new sectors start? Really, do we see the SLX, the steel sector, come back strong? It's acting very weak. It bounced off the 200-period moving average of 56.37, went right to the 14, and then got stuck there. You want to see the SLX hold very well. It must not close below 56. Preferably, it goes towards the 59.50 area by Wednesday of next week. All right, I want to get back to a couple of things that we were looking at here. I don't want to run out of time. I want to look. Wheat is down at the lows. It's already made a peak A, peak B, peak C, and it's just made the day's young. It's made a leg D. It's coming off a bottom. But there's your double bottom, that H pattern that took out the left side low, has 2 bars in which maybe 3 to get back, and it hasn't done that. So wheat is a little bit weaker than it should be. Soybeans, on the other hand, is doing very nicely. It's at recovery highs since the high that was made back in, I think it was in June in the 1600 area. It's trading very nicely, making higher highs and higher lows. It's getting to the left side. Oh, this is the one that I put in, and I didn't move the bars to the right. This is the one. Look at that. It's 3 days early to get to the left side high. This technique, the bar symmetry is just, it's just great. I love it. Look at that. To that peak D, I chose that as the midpoint. And then I said a measured move takes you to, takes you to the 2nd of January. And, but it got there on the 27th of December. So now it's in the area that says this is the resistance, but all the technicals are holding pretty well. So we'll watch to see if in this move it makes a leg D in the monthly above the continuous contract high of 1604 that was down, that was in June. Watching that. Look at the corn contract. Corn is holding very nicely. It did left side, right side price time match, that bar symmetry. It didn't break to the low. It held very nicely. Then it took out and went right to where? The 200 period moving average. Peak A, peak, just making a leg B right now on the daily chart. And you can see here again, that might be headed towards the highs to make a leg D. So you're looking at the commodities, the soft commodities. I'm including sugar here, which has been really good. It's at a peak C, and that could be an alternate count F, but it is holding very nicely. So that's the reason why DB, the agricultural fund, which we are still holding long, has been doing so well, even though it kind of looked very poor 2.5 weeks, 3 weeks ago. Now it's doing very well. So let's go on to, I want you to do that. I want you to do the crude oil, to say crude oil came off the left side, right side price time match, had a good rally, and that was from September. It had a good balance, and then came back, took it out. And this pattern right now is saying to me that crude oil is in a digestive phase between 85, it's at 78 right now, between 83 to 85 is resistance, and key support between 72 and 70. Takes either one of those out, and that trend will continue for a while. XLE, I want you to do that because of all the questions I got. Yeah, XLE is just digesting huge gains. I have to have a question to myself on whether or not that is a peak C. Everything says the weekly chart is a peak C, and it should head higher later in the year. It should head to the 95s. Right now it's at 86, just a big digestive phase. And I'm just quickly doing Exxon in this category. And you can see Exxon has made a peak in a very short period of time. Very, very small move to the upside. Big digestive phase going on for Exxon. Nothing wrong, it's just digesting. I'll be back looking for higher prices into next week. A week on Friday, I think. We'll see about that.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read considered carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Question. Basil, you in your terrific webinar, you spoke about 2-click sessions. Is this a 2-click session? I think this has the potential to be a 2-click session. I'm a little embarrassed because it's exactly what I was thinking earlier on, but I was so busy with my newsletter. Look, remember, I've spent a lot of time talking about the rectangle formation, how a narrow rectangle formation can last a lot longer than your patience. Look, from 1 o'clock yesterday all the way to the breakout at 4 o'clock, 4 o'clock on the 29th. At 4 o'clock this morning, we were in this rectangle formation. That's incredible. It happens over and over and over. Look at the rectangle formation that formed right there. For yesterday at the close, going into about 9 o'clock, suddenly a big spike up and down. Was that yesterday? 10 o'clock yesterday? On the 28th. 9:40. Oh, that was the previous at 4 o'clock, the previous session, right? And then there was a big spike, and then it just came down, down, down. So these rectangles, and look at this. This is the left side, right side price symmetry that I'd already drawn in early this morning. About it must have been about as we hadn't broken out yet, so it was right there. So it was about no, it wasn't. It was just we had just broken out, right? So that was at about 5 o'clock this morning. And I thought, oh, man, just put in a buy and just put in a decent stop and just sit there with it. But I'm going to be out. There's a whole bunch of things going on. I'm away, so I just didn't want to be in that position. But I do think there's a chance that today is a 2-click session. From early on and from the 8:30 time frame when it made that 38.24 low, any time as it crossed positive, the 9 crossed the 14. Okay, so you want some techniques here? I'll give you some of the techniques. Watch the 10-minute chart. The 10-minute chart crossed positive at 2:10 this morning, and it's still positive. And if this can stay anything can happen. We still got the 9:30 open. Anything can happen. But if this holds very steady and holds true all the way into at least 1 to 1:30 this afternoon, then it can hold all the way into the close. Because I think all the tax selling, which I thought was done 2 days ago, I guess yesterday was the last day. So we did get stopped out. We're back in, and so far it's looking really nice. And there it is. You've got your leg C in the 10-minute chart. You've got in the 5-minute chart ABC. We're in leg D. We're only in leg C in the 1-minute chart. The day has just barely begun. But I'm thinking that this is a session that just kicks us off for early next week. Wow, those could be famous wrong words, but that's where I'm looking at it. Okay, so let's get back. So a question came in, Merck. So Merck is in my Dow list. I won't be able to get to the Dow list. So Merck is trading. So here, remember we looked at Amgen. So Amgen, So this is a little complex. You see the MACD's turned down. That's why I always say to people, don't just use one technical tool. You can get clobbered by using just one technical. Try to have a plethora of tools that serve the purpose of keeping you in the trade as long as possible. Look, Merck, the 9-period moving average, since it crossed over, actually, I'll forget about trying to cover thousands of things in the next, this break coming up, and then the final break before we wrap up. Let me just do this. Use this as an educational tool. Look when Merck crossed positive right there on the 5th of October and was trading at 88. Let's go to the high, 88. Let's call it 89. And it screams up to peak F. There's a Chapman wave instant restart around about October, 3 bars, and makes a new recovery high. So that's E/F, E/A, F/B, then it goes G/C, and then it goes to a D. But that, in fact, could be a G, and that could be an A, B, C, D, E. And that's the way I'm going to go. So when I go back and I correct things, this could be an F or a G. That doesn't matter. I try to do it as formally as possible within the Chapman wave methodology. This year, with the MACD turning down, stochastic turning down, 9-period moving average still positive but pulling back, the reason why I kept it as G/C is everything was strong. But now I can say, you know what, to be safe, and this is the way I'm looking at it, Merck is making some kind of a top right here, and this is not, that is your D right there with a little, I always put a plus sign above a D and an E. But in fact, what we've got is not an instant restart, but a brand new buy, and it goes to peak A. I'm just being a little conservative, so it gives me the choice of saying I could call it a G, but it really looks like the start of a new move up A, B. This is a D. Oh, sorry, this is a D, that's an E. And this is an E, but the technicals are still pretty good in terms of the 9 over the 14. But we're also in a period now where I think that there's going to be a little bit of a rotation, and that a little bit of a rotation says this is a peak D in a leg D in the weekly chart. And it could be that Merck and some of the other farmers, maybe even some of the biofarmers, pull back a little bit as we actually see really good strength in some of the rotation that starts to pick up. Maybe we actually see a rally in the QQQ and the semis in this particular, if I'm correct. So yes. So we'll be taking profits in Merck. Was hoping to sell in 2023. I would say at 111.50, it's up 42 cents pre-market. I'd hold on for the next 3 days, not because it's tax for you. You'd like to get the tax break to sell in 2023, but because at worst you'd see maybe a 2 to 3 point pullback. Well, that's still a pretty good gain if you've been holding it. I would not just jump out of Merck at this particular point, even though this could be a peak E. Hope that helps you. I'd hold off. You got 1.5, you got 2 days to hold off, and on Tuesday you can do whatever you want. That's basically, I wouldn't say that for tax selling. I mean, I remember for years I've been talking about it. I've seen people say, oh, for tax purposes, I want to hold on. And for tax purposes, when it came to December the 30th or 31st, whatever the last day of trading was on that particular year, that particular issue they were looking at was down 25, 30%. Give me a break. You always would have taken your profits. No, you take profits when you've got your profits. You don't do it on a tax basis at all. This is a little different because I think 3 days is not going to make a big difference at this particular stage, especially since the pre-market, it's up a little bit. It just says there's some strength from the selling from yesterday. I hope that helps you. Next question came in. Let me just do this. Oh, and thank you, Pat, for you're always there for giving us great information. Pat in the Tiger YouTube says, initial and continuing claims are up. Powell should like that. Yes, that's what you want to see. And I think the market is going to want that. I've been talking, I'm going to spend more time on it, and I'll do it right now. Here's my thinking. I remember this from way back when there was a stock. It was, I don't remember, it was a food stock, and it got taken over. It was in the Dow. I think it might have been General Mills or something like that. Whatever it was. I think it was one of the generals, General Mills, General Electric, General Motors. And I remember saying, oh, I've got a big sell signal in the Dow. It's going to pull back. And the Dow just kept holding all the way through for about 6 weeks. It didn't really pull back a little bit, but not very much. And one of the reasons was this takeover that was promulgated and said that this particular stock, Dow stock, was going to be taken over, was so allowed it to be so strong that it actually held the market up through a whole rotation. So when I say rotational correction, I mean that there are enough stocks to not let it go much higher, but there are enough stocks to not let it go much lower. I'll be back in a moment.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, in this little section, of course I'm not going to be able to get through everything. I wanted to go through Amazon, Google, Meta, the works. Didn't do that. But we did cover a lot, and a lot of questions came in that I covered. So what I'm going to do right now is, look, there's a Chapman Phantom Peak. I was busy yakking. I just didn't see that's what I should have put in. I always do that when there's a chance that you've got a double top within 2 bars. And I always put it in because I want to get to a peak D as conservatively as possible. So therefore, the little hiccup that you see right here in the on-balance volume, boop, that says, hey, you're traveling in 25-cent increments. You could easily have made a little peak right there. So I put it in as a phantom, and that gets you out. Look, there's my peak D. I'm done. I'm complete. I'm done. And now I have to look for new things. And it's a D in the 5-minute chart, only a C in the 10-minute chart. And that says, as long as that 9 is way above the 14, we could still go to a leg D later on. Day's young. Anything can happen. So in the meantime, I am somewhat slightly, we haven't got oodles of money to work yet. We've built up a huge cash position. We still have our longs in the Dow and the 3-time long in the Dow. We've added to that. One of the reasons is I think that there's enough negativity here, and the double bottoms that are potentially, like in the QQQ, so close within less than a point of the left side low that I was looking at. All of this is suggesting to me that there's just a kind of a relief move to the upside. The relief move to the upside can turn into something a little bit bigger, and it can only do that if, in fact, we're holding really well at, I would say, above 90 points, 90 or higher, above after 1:30 in the afternoon. But I need to see the NQ, the QQQ, let's call it the QQQ's trading right now. QQQ, let me just go there. Trading, right there. This is the 29th of November, Thursday. It is now 8:55. We're just about to wrap up. This will be repeated again. But I wanted to give an overview of what I'm looking at. And the overview says if the QQQ can hold, they're up 287 right now. Right here, yes, I know it's a leg C to the downside, but downside, I use the upside notation in Chapman wave all the time. On the downside, I treat it as something that I interpret, but I look at technicals more, and the on-balance volume is suggesting that the Qs are pretty close to at least a bounce attempt, and that means that the Qs at 263 need to get to 266, 267 by Friday's close. We'll see if that happens. Have a wonderful rest of the week. I will not be here tomorrow, but I will do my newsletter if I'm able to, and if it's needed. Otherwise, I'll see you in 2023. Have a wonderful rest of the weekend, and a happy, healthy, and successful new year to everyone.
You might think that if you want to be successful at trading in the stock market, you're